Compound Interest Stock Guide. Today in this video, we're going to get through crude oil, gold futures, United States 10-year bond, and the SPY. So stay tuned. If you're new to the channel, hey, don't be shy. Subscribe. It's in that right side on the bottom in your video, and you can just hit that. Or if you just track down below and hit the red button, you can subscribe. Also want to disclose I'm not a financial advisor. This is just for entertainment information purposes. Do not buy or sell based on anything I talk about. Buy or sell after you did your own thorough research, due diligence, and you like the investments you're pursuing. Or speak with a financial advisor. And please hit that thumbs up. Appreciate it. Leave a comment down below. Let me know what you're thinking. Yeah, so let's get into crude. Okay, so crude, in investing.com, they give you these little like P's, and it'll say what they think of the if it's bearish or bullish. And I mean, they're fairly accurate, but they're not always accurate. It's like this is a little doji, and that's indecision in the market, and then it turns to bearish sentiment right here, right? So excuse me. Yeah, so it's just kind of coming down. So because oil's that, basically if the oil goes down, the SPY is going to go down. If oil goes up, then the SPY is going to go up. So I watch crude very thoroughly, and I take it into account. So it's just something that's a good indicator for me, and it's part of the big industrial military complex. So basically that's what's going to happen if it starts cratering, like just dropping down hard. We could see it go down a lot lower. It went down to about 46.50 today. So this is a 5-hour. Yeah, I mean, it's kind of gaining momentum. It hit a bottom down 43.86. This was when it wasn't even trading. So this was like 4 o'clock. And yeah, it's just kind of gained momentum. This was on Monday morning, and then it just kind of came up. But just kind of, it doesn't seem like it's got a lot of strength, but, they're going to print as much money and buy the crap out of oil to try to pump it up. So we'll see. I wouldn't be surprised if it goes to 50 by the end of the week, or it wouldn't surprise me if it goes back down to like 44 or even lower than that. So it's just unpredictable. The markets are very, very unpredictable. It's very, very unpredictable market right now, but we're going to look at gold now. So gold is a safe haven, and this is on 50 minutes on the candlesticks. It's kind of getting some strength, but I think it's closed for the day. It closed at 2 o'clock Pacific Standard Time, or 5 p.m. Eastern. So, they want to push it down because they don't want people to put money into gold. So they're going to do what they want to do. They're going to try to keep it down. But, when you start looking at the 10-year treasury bond, it doesn't look very bullish. And so why would you want to have money in a bond? It's better if the dollar is super easing, then you put it into gold and silver. But they really push down silver, but gold, I think it can go a lot higher. But they're going to do what they can do. They pushed it. It went from 1691, and then they pushed it all the way down to 1564, and it's just kind of coming up. But we'll see. I'm not sure of the direction right now. I mean, my mind, it's biased towards thinking that it's bullish, because when they do rate cuts and all that stuff like that, it should be going up, but they're going to manipulate the markets and not make sense for a while. So we will see, but I don't think they can keep it down forever. It wouldn't surprise me if it goes to $2,000 by the end of the year. I don't think it'll stay there. It probably would come back down. It's just going to have whipsaws go up and down, I think. So that's my opinion. UVXY is kind of stabilizing, it's probably maybe drop if things kind of get more even, but we'll see. I mean, UVXY could really push up. I don't have a position in UVXY, but it is a good indicator at the moment. It's your volatility index, so that's what's up. So let's get into the 10-year bond. So this is below 1%, okay? when inflation, they say it's like 2%, but I don't buy that. I mean, you buy a house like from after 5 years ago, 10 years ago, it's more than 2% if you compound that every year. So I'm not buying that whole 2%. And then it's lower than inflation if you're buying a 10 years. So if you're putting it in over 10 years, you're losing money on inflation. So who would really want to have their money that they worked all their years, or they got from, they got it from an inheritance and all this other stuff that they could have won their money from or earned their money from over their lifetime? Why would they want to put their money to use in a 10-year when it's below inflation? It doesn't make a lot of sense to me. So, yeah. Um, so that doesn't make a lot of sense. I mean, this is a 10-year, and the 10 year is pretty strong. Now, if you look at the 2 year, it's just terrible. It says 0.701. Who would want to put it in for 2 years at 0.71? I mean, it doesn't make a lot of logical sense. You have it just locked in. So the only people that are buying this is the central banks, because they're trying to, you know, they want the money to go into the market, but it's going to cause a recession if it just keeps creating down below. They do this rate cut with basically within the last week or so. That's from February 16th to this all the way down to like 0.71. It dropped in half in 2 weeks. Like, that's crazy. I mean, I wasn't paying attention to this, but once I heard it was under 1, I'm like, wow, that's wild. So, and that was a 10-year bond, and the 2 year is way below. So, I mean, yeah, that's really wild. And they say that the yield, when it's really gets low, it's a signal of a recession. So, yeah, I believe we're in a recession right now, and they aren't going to say it. Trump's going to say we're in a roaring economy and blah, blah, blah. But, you got to just know what's up. So that's my advice. And, we'll see. This doesn't look very good for that bond. They don't want to go into negative rates as well. They just dropped it 0.5 basis points today with the rate cut. And that's, if they do more, then they're going to end up going to negative rates. And then that really breaks the whole system. That's what higher experts that I've listened to say. That's not good. You don't want to go to negative rates. I mean, they're already in Germany and some other countries. And, but Trump's going to push that because he just wants all this easy money floating in. So we'll see. It's going to be a very dynamic 2020. And I'm just covering this. This is, I wasn't expecting to do this, but there's a lot going on. I just thought it'd be good to give my viewers and subscribers some insight from my knowledge base. So I hope this helps you out. If you haven't hit that like, I appreciate it if you hit that like now. And now we're going to go to SPY. So SPY, okay, so SPY went down from 338, okay, 338, gap down, and it's been crawling, and then it hit a low of 285. I did a poll, and I thought that there's potential that the SPY can go to about 275, 250, 225, or like 285 or something like that. Those were my 3 ones. I had 4 on the poll, and the people thought, I think the majority said 250 or 275. So yeah, we'll see. There's definitely a lot more downside risk, of the SPY going a lot lower. Yeah, they can do the rate cut and try to prevent the inevitable, but there's just this pandemic that's going on with the coronavirus is affecting the markets. When supplies aren't coming in, there's risk of contracting that, so it's affecting tourism. And tourism is big with the oil because they use a lot of oil when they're traveling. You got the cruise ships. It's a lot of money that goes into the tourism. So, and then people, but the bullish side is to say about oil. People are getting away from the city, so they're driving around and getting around and about. So they're spending a lot of money on travel. So we'll see. but I'm pretty bearish on crude. But they're gonna try to push it up, and because I'm bearish on crude, I'm also bearish on the SPY. But they are gonna do what they're gonna do, and we'll see. But this is a pretty, it's down 0.28.84% today on the SPY. This doesn't hold good for tomorrow. I wouldn't surprise me if it gapped down to about 290, start hit back down, like double bottom around there. If you see it on the mountain one, candlesticks doesn't show like the formation, but on mountain you can see it. So it's like a W, and it wouldn't surprise me if they did that, and then they just like pump the shit out of it once it goes up. So that's my thinking. But again, if it breaks below this level, that's very bearish, and then you get back down to like levels like this, and it can go a lot lower. So anyways, that's pretty much my episode. I hope you enjoyed this session. It's not something that I cover that much, but I thought this was a vital information to share with my viewers and subscribers, so I'm going out of my way. So I hope you enjoyed this. Leave a comment down below. Thanks for watching. Thanks for listening. Shaka, peace. I'm out, and I'll play some music just for the F of it.